buying movie tickets,
Economics.
going to restaurants.
Big fish project is the GBA going to do exactly the same
Place
thing.
for cash.
You treated me to a very nice lunch and talked to me about this CEO 123, series, and I said I couldn't have just a free lunch, so I said agree to come to speak. And actually, it was very good that you got me to think about this topic. It's not that I don't think about this topic; I think about it a lot. But since you got me to think about, I need to speak on this topic, then I have to really try to formulate my thoughts and organize my thoughts. And it so happened, but our date for this talk was scheduled to be May,
Yes.
right? Although we met like early this year, much earlier this year, I forgot. Yeah.
Before Chinese New Year.
Yeah. And then
Try to pin Professor Dam is very busy. This I cannot, that I cannot. So.
And then the Economic Journal called me for an interview, around before Chinese New Year. So actually, I gave my talk away to that interview. So actually, because of you, I thought about what I want to say today, and then I gave my speech already back in February. So today I'm going to tell you why I said what I said. Okay, I'll give you more details. And it so happened that I was on that interview I gave to Economic Journal. I really emphasized one thing, which is Hong Kong should really speed up or relax the Exchange Traded Fund Connect scheme. That was my major headline in a page A2 interview. And so 2 weeks ago, just 2 weeks ago, the CSRC, as you may know, announced 5 measures to help Hong Kong. And measure number 1 is to relax the ETF Connect. Not to the extent that I was hoping for, but it was a right direction. I don't think they read my interview. But I think that somehow maybe we're all thinking about similar things. So here is, again, you give me an opportunity today to really spell out what I was thinking, what I have in mind.
Okay, before you carry on with the story, maybe some laymen there with no knowledge of the financial world.
Okay.
So ETF is English education or something like this. Could you just, as layman, give a little bit of
Exchange traded
definition?
funds.
Yes.
Oh. Look, exchange traded funds is what it means. They are traded in a stock exchange. Okay. They can be many structures, but a simple structure could be, let's say, a portfolio, a collection of assets that is tracking an index, for example. So you can have a technology index ETF, meaning that those funds will be invested in many of these stocks, and then you can actually buy and sell those funds as a unit. You don't have to buy securities one by one, you can just buy a whole portfolio. Okay, so that is the exchange traded funds. And I will explain to you later on why I think that's important. Okay, so that's, okay, so, okay, I'm looking at time there.
Don't worry, yes.
Okay, okay, go.
Don't worry about time.
All right,
We'll stop the clock.
Before I talk about this, this scheme, I want to go back a little bit, talk about it in a bigger picture about Hong Kong. Why do we have come up with new ideas? Because Hong Kong is facing a lot of challenges. Right, I think as we all know, we are facing some challenges. Much of that, of course, is arising from the political rivalry between U.S. and China. I mean, let's acknowledge that is in a backdrop. We can debate, argue about that, but I just try to say, okay, look, it is with us. This tension will be here. U.S. will actually try to limit China's growth in technology, and as well as economic GDP growth. U.S. wants to be number 1, and so it will do everything. Not everything. It will do a lot of things to keep China's growth in check. And as you can see, in the financial world, that means that U.S. will be restricting a lot of funds investing into China market. Of course, mainly technology market, but who knows what. It could be also expanded to other part of China market. So some of the funding that we saw in Hong Kong, typically going into China market, will be much less because of this Chinese problem. Okay, that's number one. This is the big elephant in the room. On the other hand, I want to say that I'm still very optimistic about Hong Kong's position, because actually we are now in a world where there is a lot of economic growth in Asia. Look around Asia, including China. There's a lot of growth. So there's this growth in places like Indonesia, India, and so on, will generate a lot of wealth, in this region. So that means there's a precondition for asset management, wealth management business to be in, because there's so much wealth. And this kind of wealth cannot be all dominated in one center. Well, the money will look for places where they can be managed in a diversified way. So Hong Kong will have a very good position because we will be managing some portion of this kind of money. Okay, so that's my number two assumption. Okay, given that, if you have these two assumptions, then we basically ask ourselves, can Hong Kong still compete, with the liabilities that we have, and then can we really take advantage of the opportunities that we are facing? Now, I would argue that if you look at Hong Kong's growth, both Hong Kong's growth as well as other major cities' growth, the finance is part of your economic development. Finance is not just something you invent, in air. It is part of the economic development. So Hong Kong is still, I believe, in a very strong position to be the business center, in this part of the world. So there's a lot of things that we can do for China, for ASEAN, for this part of the world, that we can generate both economic growth opportunities and therefore the financial opportunities. They come hand in hand. So I think that for number one point I would make is a simple point. What we are doing now, the government, what government is doing now, what the community is doing now, we should do it much more. We should make Hong Kong a lot more international, connected, and then keep on talking about keep on performing our basic functions. It's not easy to replace Hong Kong because we are highly integrated into the business world. Our legal system and so on, is just pretty good. I think we should emphasize all these linkages. So in a way, I don't really feel pessimistic about Hong Kong's financial center, because I think we are a very major economic city. Now, so we should do more to promote Hong Kong and to connect more. And in that regard, I think for example, getting more people from more students from Asia, around Asia, to come to Hong Kong will change our population mix. Will get Hong Kong much more ready, for managing opportunities in Asia. So I think, for example, I just read that UST has a new scholarship with Indonesian government. So that's one of the things that we all should be doing to really connect Hong Kong much more to the other parts of the world. So number one is just doing what we're doing now. Family office, talent scheme, just do a lot of that. Hopefully, we got more we can make ourselves very competitive. So that's not an easy one, but that's something off, number one priority. Now, number two and three, I would talk very quickly. And then we'll talk about the number four one, which is about asset management center, which I think is very important. The number 2 point is something you see Hong Kong now is also trying to do. I think it's doing very well, which is that our regulators are becoming more innovative. Okay, I was a part of a government official, so I must say that when I said that, it means a lot. they are really innovative. Okay, and I think that's something very interesting because Hong Kong has a very good regulation. People may underestimate Hong Kong's regulation. We are actually very good. Our regulators are top notch. We are well connected in the international regulatory scene. We are very strong in all this international body. So because Hong Kong regulators are highly respected. So when we have Hong Kong regulators, being innovative, I think that's good. Okay. Of course, I'm talking about the crypto asset scheme. We just launched a crypto, Bitcoin, the Ethereum ETF. There are a lot of things that this is the first in the world, okay, that an ETF scheme based on the real assets, exchange traded assets, are actually launched. Okay, so in US they have the futures-based ETF. In Hong Kong, it's a real exchange traded ETF. I think that's very interesting. The Hong Kong regulator actually is the first in the world to launch such a crypto ETF. So, and then the other thing that HKMA is thinking about is launching will be the stable coin regime. That's interesting. I don't know whether that will actually means business opportunities, but the fact that the regulators in Hong Kong are actually tackling this important problem. Many countries shy away. They don't know how to handle this problem. They don't get involved. But we actually getting into this regulation. And Hong Kong has a very interesting strength about it because we are a very small place. I think Hong Kong and Singapore are very, very similar. We are a very small market. We have strong regulators, and we also have a strong political regulatory dialogue. So it's much easier for Hong Kong and Singapore to actually innovate on financial product and financial regulation because we have very strong dialogue between the government, the policy makers, and the regulators. If I may say, in US, it's a totally different story. It's not clear who is in charge in US financial regulation. But so it's much more easy for Hong Kong and Singapore to innovate. And I think that's point number 2, I want to say. So good to have tried some innovation and see how it goes. I'm also involved in a Web3 society. So we also think that a Web3 is something we may consider in the future because a Web3 will allow the financial transactions to be done much more cheaply. Okay, but if under good regulation, then it may take off. So Hong Kong has a lot of opportunities. And funny thing is, a lot of the foreigners were surprised. How can Hong Kong allow a crypto ETF or crypto exchanges where they are banned in China? Where they're banned in China, how can how do they make it happen? Well, that's Hong Kong, the beauty of Hong Kong. We are an independent financial market, so we can do what we think is right for Hong Kong. So my number 3 point is a point I want to make, but although it take a long time for Hong Kong, actually may see some fruits, which is that it is important to emphasize that Hong Kong need to have much more, much stronger innovation and science and technology economy. So we need to have that. So I know we are working on it. It may take some time, and some of that actually may benefit finance because technology can benefit finance and vice versa. So I think it's important that we don't forget about that. But it will take some time for us to see the fruits of this effort. But I think Hong Kong should really push for technology and finance. Of course, the real bank that I'm a chairman of, we are big believer in financial technology, and I will talk later on maybe a little bit about that because we are a fintech company. We are doing much more in Indonesia now than Hong Kong. So that really example of how Hong Kong technology sector can expand beyond Hong Kong. But I'll talk maybe later on. But that's the 3 points I want to make. The final point I really think is a major point of my speech is about asset management. And I'm going to spend more time on that. When I joined the government back in 2007, we already had a lot of IPO ranking, financial center ranking. Hong Kong was not number 3 at the time, number 4. I think we were number 4 when I joined the government, and then later on, become number 3, of course. Partly due to my lobbying. So
great work.
But
lobbying work.
Partly because of mainly because of the work of the people here in this room. I kept on reminding the Hong Kong media, the press, try to educate the press, as well as talk about other policymakers in Hong Kong, my colleagues in government. I say, A financial center is not ranked by IPOs, okay? Hong Kong has too much fixation on IPOs because that was, what make headlines, okay? And we love all this IPO ranking game, So I said, look, IPO business is good business. We love it, but it's not the entire matter in the financial market. You look at the world. We think London financial market is a very strong market. How much IPOs London had? Okay, nothing. No, not much. Okay, at one point in time they have a few. They tried to do AIM market and so on, but it wasn't very big in IPO. In Hong Kong, we talk about Singapore being our competitor, right? How big is Singapore IPO? They never have many IPO. And then we talk about Switzerland, big banking center. Switzerland has also very little IPO. The major IPOs in the past couple decades in the US and China. Okay, US is an amazing engine, right? Because it does take in all the money around the world, okay, and then invest, and then invest in IPOs launch in New York Exchange and then the Nasdaq. So they're amazing capital market for fundraising. But all the other ones are not doing as well as US. Never have. And then the other point I make is that there is a lot more money to be made on asset management, because asset management, like I think the bankers will know, is a fee business. You collect fees. As long as there's asset under management, you collect fees, right? In IPO, it's wonderful, very big margin, but you live by day, live on deal by deal per year, per day. So it's a very different kind of business. I said Hong Kong should really do much more to develop an asset management business. Okay. The unfortunate thing about Hong Kong is that we are very small. We are so small, how can you develop asset management business? Of course, you have to attract money from outside. That's what Hong Kong should do, right? So clearly, even at that point in time, I said Hong Kong should really try to really bring in the Chinese money, the Chinese mainland money. Not just Chinese companies, IPO candidates, but Chinese money into Hong Kong so that we can actually manage those as financial assets. All right? Now, back in those days, I still remember that we tried to lobby the central government for allowing an individual QD. You know what QD is, right? Qualified Domestic Institutional Investor. So they are institutional investors can invest overseas, but individuals could not. So we are lobbying the central government for allowing QD2, individual, scheme for these things. It didn't, we lobby, but it didn't go very far, because allowing individual investors to invest in Hong Kong was a difficult policy breakthrough. Okay, and then luckily there was a Stock Connect scheme. Okay, this year is the 10th anniversary of Stock Connect scheme. The Stock Connect scheme idea came by about 11 years ago. And then when the idea came up, me and my colleagues in government recognized that this is our QD too. Because this Stock Connect scheme will allow individuals in China to invest directly in Hong Kong, okay, through an exchange mechanism. And of course, they can only invest in the stocks in Hong Kong. They couldn't invest in other financial products. But that's good enough, right? It's good enough as a first step. So we saw that as a QD2. So of course, we go for support. We went in, support the policy and lobby and so on, and make that happen. So 10 years ago, the Stock Connect scheme was launched. Okay. I want to say, and then I want to say that in asset management, I feel that it's really the most important part, which is why in the second phase in the Stock Connect scheme, which is, I forgot now, maybe 2015 or 16. Okay. The first stage of Connect scheme is Shanghai and Hong Kong. The second phase is Shenzhen and Hong Kong. And when CSRC and Shenzhen wants to come in the Connect scheme, I said in my Hong Kong office, I said, well, what do we get in return? If Shenzhen can want to come in, what do I get in return? Can I bargain for something? Because I have already most of Hong Kong stocks in the Connect scheme. So what can I bargain for getting Shenzhen into the scheme? So I proposed one thing, ETF Connect. I said, let's put ETF on the table. So if this is our, basically put in, so Shenzhen exchange come in and ETF come in. So my point is that I would like to see more Hong Kong assets can be purchased by the mainland investors. This is whole, this is my asset management, sort of like proposition. So that's why ETF actually Connect go in because we're saying that let's trade, to get it in. Now, why do I think ETF Connect makes sense? Okay, he's going back to the first question you asked me: how to define exchange-traded funds? If I have just Hong Kong securities in Hong Kong, then these are all Chinese stocks, Chinese companies listed in Hong Kong. Basically, Hong Kong assets now is all Chinese company. I cannot enlarge my investment assets because I have to just have the Chinese assets. How can I enlarge my asset pool? Now, exchange-traded funds actually allow you to expand that asset pool. So, for example, I know that Hong Kong Stock Exchange just launched a, is it Saudi Arabia ETF? Is that right? Right, a Saudi Arabia ETF, right? So that means that you can actually have a stock market outside of Hong Kong, outside of mainland, and be traded in Hong Kong. Okay? If I can do that, I can have Indian ETF, whatever. I can have technology ETF. I can have all kind of ETF, traded in Hong Kong. Whereas the underlying assets are not Hong Kong assets, but the assets are around the world. So all the ETF managers will pick and choose, and then put those guys into Hong Kong. If I have ETF Connect that works the way that I hope to work, then the Chinese mainland investors can be buying all these assets in Hong Kong, and they're buying international assets in Hong Kong. Okay, so the asset pool that we have in Hong Kong is a lot bigger and much more diversified. And actually, this is very good for, I think it's very good for the financial investment objective of the Chinese investors too. So the whole, okay, so that was the, so when I propose ETF Connect, this is what I have in mind. And now when I come back to the present time now, we have some difficulties in the IPO market. I think it will come back. It will not, I think there's some, we will see more flows later on when the economy is getting better. But how do I still believe Hong Kong should really try to enlarge our asset management business. And bringing liquidity from China to Hong Kong, I think is the key. And there may be other ways to do it, but using, the ETF is one easy way within the current policy framework, okay, that actually China may agree, okay? So when I heard about the news that the CSRC changed relaxation, allowing the ETF Connect portfolios to now compose no more than 60% of Hong Kong stocks. Before 90%, now it's 60% Hong Kong stocks. It's definitely a good achievement, okay? It's not there yet, we're not there yet. I think we should push for more relaxation. But it seems to be that at least what we are proposing, what I'm proposing now, is consistent with the Chinese policy decision, which is, I think, is important. And I think that basically, I would like to see Hong Kong do more. Emphasize, this is not just one goodie or one favor. It's not that. We're not just asking for goodie and favor from CSRC. We have to position Hong Kong as an asset management center for China. Okay. Now, of course, within the risk control that China would like to see. For example, the ETF Connect has a lot of risk control. The money doesn't go away. They come to Hong Kong and then operate in a closed loop. which is how the current risk control policy should be done. So I think we should really lobby more. Hong Kong should lobby more. You imagine that if we have not just individuals managing their assets in Hong Kong, okay? If we have Chinese insurance companies, okay, deploy the premium, okay, investing in all the securities in Hong Kong, that brings a lot of money, brings a lot of liquidity in Hong Kong. So my point is that there's a lot more business out there. We should not be just deterred or discouraged by the geopolitical tension that affect our IPO business. We must really rethink about reposition ourselves Hong Kong, how to become a wealth management, asset management center for a big market. China is one, and of course, I think around Asia is a lot of potential liquidity we can get. It's a lot of work. Some of that, of course, depending on much more lobbying, much more policy understanding, and so on. But I think if we are clear about our direction, our goal, I think we can get there. So that's
good, very much
my talk.
so. This seems very simple, easy, following your lines. It was so easy that you said that regulators are being more innovative, and China also seeing that in the geopolitical situations, there's limited options that they can look for. Why people are not even giving it a more impetuous push and all that?
Sorry.
What is the concern of, you talk about ETF?
Oh, okay.
It seems low-hanging fruit, very easy, then Hong Kong been doing so successfully, and regulators being so innovative.
Okay.
Why are we still not having it much faster and bigger?
Well, it's not well. It's nothing is easy. Nothing is easy. No, nothing is easy. Remember the Connect scheme take 10 years. It's more than 10 years ago that we actually started the Stock Connect scheme. So and even the Stock Connect scheme went through a lot of, even in the early stage of formulation, went through a lot of up and down. There's so much concern on the part of China, about the risk control, and so on. So I think we understand that making policy changes oftentimes is not easy. Okay. I don't think I won't say it's easy. I think the direction is easy to see. Okay. How do you actually get there? It will take a lot of step-by-step and coordination. I think an important point about Hong Kong's situation now is that although we talk about the challenges that we face, because of the political tension, okay, indeed they are quite a bit. But we should also see that now we are very clearly, Hong Kong now is very clearly China's only international market. And that's a very strong position. So I think the Hong Kong community, our government, should really emphasize and play on this card. We are China's only capital market, international market. So, of course, how much of that mean will depending on what is China's financial opening policy, okay? And I think that, even given that, because Hong Kong has an important role, Hong Kong does need, a strong support from mainland China, okay? And we can actually do a lot of risk control to satisfy, the mainland government concern. I think that kind of trust is very important. So that kind of trust is very important. It does mean that we have to basically earn the trust, build on the trust, and actually deliver on the goods.
Okay. You also mentioned earlier about the IPO is not everything out of this whole financial spectrum, the eco cycle of that. But it's very conspicuous that people seeing all these IPO dropping. You quoted very good examples, London and all that, no IPO. And when you first started as the secretary, the Hang Seng Index was 23,000 something. And when you left in 2017, it's about 26,000. So during your 10th decade, you sort of stood up maybe some of the good work you have done. But people actually seeing these affecting their daily life, where you're buying shares or they do as stockholders. Yeah. So these are important things in the minds of the
absolutely.
But actually, the contribution to the whole sort of financial empire that you are talking about, this future of the powers of the financial strength of Hong Kong do not really stand on these things, but it affects people, the mind, and more psychologically, the confidence level. So
No, this is your point well taken. Number one, there's no escaping from the fact that Hong Kong is a financial center, and everybody, has money invested in, if not in a stock portfolio, but in a property. And property and stock market are tied together. Okay, it's just that's a fact of life of a modern, highly international city. Okay, now what you can do, of course, you can diversify economy and so on, but no, financial matters.
Yeah, just like the development of bank into the licensed digitalized bank, and you mentioned about your bank is the Relab Bank is doing very well in Indonesia as compared to Hong Kong. Is there a major difference? Is because the size of Hong Kong only a 7.5 million population against the couple of times bigger than the Indonesian market? That's why it take off much faster there.
Oh, okay. It's a good case. I talk about Hong Kong. Relab Bank is a very interesting case study. Of course, very long story short, we are a Hong Kong digital bank. Actually, our ambition was never just be a Hong Kong digital bank. So our ambition was to go outside Hong Kong. Okay. So 2 years ago, Simon Long, the founder and company CEO, was successfully negotiating and leading a consortium. I think we raised 500 million US dollars.
Wow.
We raised 500 million US dollars and bought a local Indonesian bank and then get the regulatory approval to make that a nationwide digital bank. So the bank now is 6 months in history. I think we have 700,000 customers, something like, right? Okay. Maybe 800 now. 800 now.
Don't give them pressure.
And then we should be 2 million in a year. That's the the scale of the business. I think for the lesson for us is that Hong Kong is a great place to be because without Hong Kong we would not have the regulatory expertise and the reputation to bid on an Indonesian license. So in Hong Kong we can also raise money, from a consortium. So it's I think that's, but the point I would make, the second point I would make, it's a very obvious point, is that you cannot just stay in Hong Kong. You have to go either into the GBA, which we would love to, and then as well as I think in other parts of the world. I think for us, we identify Indonesia to be a good opportunity, and as I know that my colleagues now are also looking beyond Indonesia, but that's they're very ambitious.
Okay, so there is still a future for the licensed digital bank outside Hong Kong.
I think Hong Kong has a very strong capital, which is that if you are a regulated entity, if you are from Hong Kong, you know the market, you know the regulation, it's a quality, it's a standard of approval. I think we should really capitalize and monetize our tremendous reputation.
The most current hot topics about ESGs, this green financing, would a licensed digital bank kind of fall into that category? What you call that?
We basically, for us, the scope that we are involved in will be very little, very small, because we are much more focused as a consumer bank. So I think unlike some other company which are more specialized in corporate banking and so on, they will have much more, I suppose, ESG and green related concern or issues. I think we are much more. Of course, we have those, but we are much more focused on consumer lending. So,
because Hong Kong should be one of the biggest in terms of green bond issuing in Asia. 1/3, if not more, of the green bonds are issued out from Hong Kong. So will you see that as Hong Kong will continue to gain strength on top of what you just said about asset management? to be one of the engines of making Hong Kong financial center, international financial center, continue to grow?
Well, I see green bonds. Of course, I see green bonds to be growing. I see that to have a lot of potential. I don't think you should talk about green bond versus asset management. It's a very, it's totally different kind, different concept. I see green bonds and will be part of this social engineering or financial engineering that we need to do in order to make projects go green, okay? To achieve the kind of green objective that we have. And that comes part and parcel with other policy. So it cannot be just an issue of green bond. It has to be other policy by the government, and not just Hong Kong government. It will be probably the mainland government in terms of their green policy and how financing will help contribute to that. Now, it is a potentially a very big opportunity for the green and fintech to marry together, because in order to achieve a lot of green objectives, the technology and data are very important. So it's a very interesting angle where this can be combined to achieve the objective of going to carbon neutrality and so on. But we are just making those beginning. I don't know how far we go.
I will ask one more before we open into the floor. It's about offshore renminbi. Because trade-wise, mainland account for about 14% of the total world trade.
Yep.
But in terms of settlement, it's only about 3%. So does it mean that so easily there is a sort of 11% gap for it sort of move up and then renminbi become more international?
I think if China has a very keen objective promoting it, I think we can go a long way. I mean, the question is, what is the, is there a policy driver? Is there a policy desire to actually get it to be internationally accepted and widely accepted? I think it depends on the policy decision. Otherwise, it's very difficult for the market to organically grow. Okay. If China has objective of doing that by allowing more offshore RMB to go overseas and be invested and set up, allowing more RMB offshore bond market and so on, I think you will see more of those kind of transactions based on RMB. But it's a policy choice.
Great. With that, I'm sure there will be some interesting questions from the floor. Would anyone like to ask? Yes, Professor Albert.
My question is probably academic and business, given your diverse background with students at the back. You talk about asset management and then family office, green finance. How should universities position the students in terms of the programs, training them? Used to be corporate finance courses. How do you educate the students, both in terms of the knowledge that you want to instill in them, and then guide them in the careers? Thank you.
Thank you. I think finance is a very diverse topic, right? So when you talk about different financial products, different kind of financial area, it seems to be very complex, okay? But I think there's certain fundamental elements in it that's very common and so key. Clearly, you have to know how the cash flows go, right? Either corporate cash flows or investment asset cash flow. So really understanding how these cash flows go and how you got to get valuation, that's very important. So I think that's fundamental about finance. When you look at an asset, look at a transaction, who makes money and from whom, and how do you find out those value? I think that's basic accounting, basic finance. So teaching those numbers, crunching those numbers, understanding where the numbers come from, I think it's very important. Because when we talk about new products, there will be more and more new products. But at the end of the day, is that who is paying for what? And when you saying that you have a value, who pay for that value? Okay, so I think that's a very basic. I think I haven't seen any kind of new products in the last 50 years. I mean, they are the same. Since the beginning of the derivatives, right, call options, I think everything is just basically follow the same pattern. So I think basically I would say for undergraduate students, good training, good basic training in the accounting and then the basic financial cash flow trading. I think that would be very important. I don't know, is that right? There are a lot of professors here. Okay.
Yes, Mark.
Thanks for doing this. I'm not sure whether I should call you dean, secretary, chairman. There's so many.
I know you for a long time.
So many titles. Yeah. Well, look, I want to follow up on something that Patrick raised and that you've talked about as well, is China's financial policy going forward and how that affects Hong Kong. I've been teaching at CUHK for the past 16 years as well as some of the other places, and teach not finance and economics, but financial policy and economic policy. Most of my students are mainlanders, and they often bring up this topic about what's the direction of the reform, the internationalization of the renminbi, full convertibility, and so on. What are the prospects for that, and how will that affect Hong Kong's position going forward, both from a positive and negative side, because we're an international financial center. As you said, China's really only international financial center. We actually benefit in some ways, from China having a closed capital account. So,
I see your point.
Yeah.
I see your point.
So I just want to know what your feelings going forward and how that'll affect Hong Kong.
Well, this topic is often raised in the last 20 years since I began to teach and then be a policy official. It's always a topic, same topic. And I basically think, look, China has shown to be much more cautious about it than anyone estimate in the past. So I think there must be good reasons why they're very cautious about internationalizing the RMB. So that's one point, okay? But even if it does open up, internationalize RMB, okay? I imagine that there'll be a very long window in which Hong Kong actually can benefit, okay? I think the scenario that if you have a scenario where RMB takes a place like US dollar, okay, then become a well-accepted currency and reserve currency and so on, then maybe Shanghai can be that center. But anywhere in between, okay, Hong Kong should do very well because Hong Kong should be able to actually, do the RMB business and also be the international capital market. So we should have a long time lag.
Excuse me. I'm Veronique from HKUST. So I want to pick up on a point that you mentioned. And in fact, Gucho Agustin also mentioned on Monday night on the campus. And you make the point that Hong Kong is and should be an international city. And we should attract more international students. But that's not what I see happening. And you also mentioned that Hong Kong is China's capital market. So what recommendations would you give to your former colleagues to bring non-Chinese international talent and students to Hong Kong? Because we're facing that problem at HKUST as well.
I don't know the current policy or current thinking. I always thought that the international students quota, there's a quota for that, and then actually you cannot fill that quota entirely with mainland students. You must, right? Then you cap it at 10, the other 10. Right, right, right.
But we don't want to.
Exactly. Exactly.
And that's our challenge.
Oh, so we cannot fill 10% or what?
To fill 10%
Because the
Right.
government is relaxing that.
But it's not
total-
government policy, right? Government. Oh, okay. Yeah. Okay. Okay. It's not the government restricting us. It's really a question whether we can appeal to get more. Now, well, my my 2 cents worth of thought is that it is incumbent on us to do most of the work. It's incumbent on the universities and the community to do all the work because, it is how can we raise money? Can we raise funding? Can we get scholarship? Can we do more promotion? Can we get our faculty in front of the Indonesia or Indian school and so on to attract them? I think a lot of that marketing recruitment has to be done by us. Okay, it's very difficult for the government will have all the policy, but on the other hand, how to get it? When you get to the ground, you need the bodies to get to the ground to ready to recruit and to market. It is a community effort. I think we also put together to do it. I mean, if you say the government has a policy restricting the international intake, then we say change that, but they don't have policy. And I would say we need to get raise some more scholarship. We have to get out there, be in front of the parents and so on. It takes time. I still remember when I was a dean in the business school. Wow, okay, many years ago. Actually, the person who was the most successful in recruiting international students is a current dean. Right? Kayan Tam was my associate dean. He went to Korea. This is 20 years ago. He went to Korea. He went to Northern Europe to recruit students, and I was like, I couldn't believe it. Why would someone from Northern Europe come to Hong Kong? And Korea too. This is way 20 years ago, way before all this, Korean movies, TV. So I think it's amazing that we actually did that many years ago. Right now, some places are more difficult for us now because of politics. Okay, I understand that there's some political situation, will make it difficult for us to recruit students from some places. But it means that we must concentrate on the other places that are more friendly and much more open. And Hong Kong economic future does depend on us join poor students from, let's say, from Asia. So I think we should really go to it. Oh, yes, the two.
H first, and then your WeLab Bank colleague. Yeah.
Oh, no, there's another one.
Yes.
Thank you, Casey. I'm very thank you for your pioneering efforts for ETF Connects.
Okay.
I never heard about that very old story. You are the pioneering
It's
person
true, actually. It's true story.
It's a very
Old enough
secret
to tell
story.
stories
Thank
like
you.
this.
As a second largest foreign ETF issuer in Hong Kong, your idea, ETF Connect, is fascinating. I totally agree with your point. But one concern for Chinese regulator, especially SAFE, is a capital outflow.
Sure.
If we, the mainlanders, buy non-Hong Kong names, which is global equity names, there's a major concern for currency controllers, right? But I want to see your some thoughts and ideas about how convincing them that SAFE or whoever. And one idea is that if you look at the QD, now is accumulated QD asset is 165 billion US now. If you just reallocate just 20 to 30% of the QD assets into Hong Kong-based ETFs, then we can save all the management fee in the mainland is paying to foreign managers. We are foreign managers, but anyway. And then if you set up funds in Hong Kong, you can collect more management fee, which is tax paying anyway, and then create jobs or whatever. It's a win-win situation. You can do those kind of things just now. So I think all in all, so any ideas for convincing the mainland regulators in terms of currency controls?
Well, the Connect scheme has a closed loop, right? The Connect scheme is a closed loop. So even the money goes out, it cannot be cashed out. The money has to come in. So that's how in the first place we convince the mainland on the Connect scheme, because it's a closed loop. So I think that kind of that kind of feature, I think, is still something that we can emphasize on. Now, as to the other possible, fungible things, I'm sure the industry also have a lot of lobbying effort. My feeling is that given the new policy that we relaxed at ETF, it gives me a lot of happiness, pleasure that actually seeing that they're doing something. So that means I would say, emphasize it and make it. When you want to talk about a policy, we have to talk about policy in a very high level that benefit the country. So that is how we should really think about that. So in terms of the policy lobbying, I trust the Hong Kong government, my colleagues will know how to do that. How do you put it in a way that actually convince that this is really good for the country and good for Hong Kong? And supporting Hong Kong is a very important task. So I think we should keep on saying that we need your support. Okay.
Good. Very quickly, because
I think
we
that's
are
fine.
almost coming to an end.
Hi, I'm curious to know, given that financial markets encompasses lots of things that Hong Kong currently does not do well, such as maybe debt trading and derivatives of commodities and so on, do you feel that there is a tacit understanding of division of labor, or is it going to be open competition amongst the different cities in Asia that wish to all become some sort of financial center?
Just a derivative or anything?
No, I'm saying of all the things in financial markets, is there some understanding of division, or is it going to be just dog-eat-dog competition?
You're right about the second point. That's never, no, it's always a competition, right? But competition is never bad. I think definitely you've seen a lot of competition in the trading, on the trading side between Hong Kong and Singapore. And I think that's really, I mean, it is really two markets, because we are very similar. Hong Kong and Singapore are very similar. We are, our legal structure, our connectivity to the other markets make us a so similar place. So that's why we can always jump into the same products. Okay, it will be more difficult to see Hong Kong competing with Malaysia or other markets. It's always Hong Kong and Singapore. Okay, so. On the other hand, I think there are big enough business, okay, for these two places, and clearly, given Hong Kong is China's, financial market, I would emphasize that point and try to really get more and lobby for more securities to be done in Hong Kong. I mean, this is what Singapore cannot do. So they have the advantage, we have our advantage.
Great. The final questions, from the floor.
Okay.
Will you be able to stay for
Sure,
1 or 2 more
of
minutes?
course. This is my friend, I must say. I must answer this question.
Friend has
Don't
always
make it
have
too-
a special
don't make it too hard.
position. Yeah.
Don't make it too
No,
hard.
you first. Then
Thank you. Casey, thank you very much for sharing today. And regarding the point about that you make on maintaining Hong Kong as the international financial market, I think it's very important. Particularly, we don't want to really see a market that is only having China companies in there. So regarding the ETF Connect and also all the innovations by the regulators that is happening, we'd love to hear about it. Regarding we as a market player, say for example, the financial institutions, banks, insurance companies, so on and so forth, what are those things that we can do to try to really help to also work together with the team in Hong Kong, regulators and officers, to do more about it, particularly like virtual access. Now we're seeing that this is a trend here now, okay? And everyone is talking about it, but actually we don't know how to do it. It's really how, because it's evolving so quickly, and it's going to be different tomorrow, right? So in a way that it's very difficult. But any insight that you can share with us about that?
Well, I think Hong Kong actually is I find Hong Kong to be a place where the industry professionals and the market regulators and government officials keep on talking to each other. I mean, this is not a place where they go into separate rooms and not communicate. We have a lot of communication. So I don't think there is a issue about not knowing what's happening. And now, of course, when you are lobbying governments have many concerns, always have many concerns, and they won't tell you they will do it or they won't do it. They just keep on saying nothing, right? That's a typical. But I think that, on the other hand, I think that kind of communication in Hong Kong, I think is very good one. I think in Hong Kong, I think we have better communication than in many places. In Hong Kong, in some other countries, just because you have money, you can buy lobbying power. You can lobby for policies. You can lobby for changes. In Hong Kong, I don't think money works that way. I think we are much more open and a collaborative system. I think it's really. I think right now, I mean, the government, of course, is very busy. Hong Kong is facing a lot of challenges. I would just say that it's all of our duty, responsibility to try to really contribute to a good dialogue and then to promote Hong Kong in many of our own way, to promote Hong Kong so that people can see Hong Kong for what it is. And if the government has certain messages, of course, they can also pass on to the industry. For example, if the current message is to get more Chinese government policy support, then we should let everyone know, and then we should go on and lobby, right? The Fund Association, I'm sure they're doing all that. So I think that's the collaboration. In the past, it's been very healthy. So I hope that we can just continue doing that.
Very good.
I think we are not.
The last question from the floor.
Thank you, Casey. My question actually is on the virtual banks, which I know is the old term. Just a question, really. Do you think that the digital banks have really made a difference to Hong Kong society in the last number of years? And I work with some SMEs, and we've seen a lot of SMEs close down, leave Hong Kong in the last number of years, mainly due to COVID, etc. But do you feel that the virtual banks are doing enough to really help smaller, medium-sized businesses in Hong Kong, which I think is very important for Hong Kong's vibrancy?
Well, I guess 2 points. For 2 points. The first point I want to make is that from a market development perspective, virtual banks actually have been very important because of virtual banks, Hong Kong entire banking sector has become very digitally savvy, okay, because of the competition. I would say Hong Kong is one of the places in the world probably where there's, I think we are as digital as good as any other cities. And considering where we were 10 years ago, I think this is big change, okay? Now, that's because of competition. The digital banks competing and then forcing the large players to change and everyone adopting digital platform. So that's really what make the magic. The second question, the question you really asked is that how do they help the SMEs? Okay, this is a very important question. It's a very good question, and I know that my colleagues, my past colleagues in HKMA, were clearly always concerned about that. How do we help SME? It's not entirely. It could be related to digital bank policy, but it may not be. It's really much more broader question. How do you have banking access? How do you have better access? How do you have SMEs maybe providing better data points that the banks can decide on lending to and so on? There may be solutions somewhere, but it's really a much bigger question. And then certainly for virtual banks like us, I don't think many of us actually were capable of lending in the SME space. I don't think we are, so we are not in that space. But for the larger banks, I shouldn't offend anyone. I mean, they may have more data, more capability. But certainly for some of us, we're just starting out, and then I think we are much more, for us, we are much more focused on consumers. Yeah.
With that, thank you very much, Casey, for your very insightful sharing and the positive energy inside of the future of Hong Kong asset management model. So join me again.
Oh,
You'll
okay.
recap it.
Thanks so much. Thank you. Oh, you're so kind. You're so kind. Okay, thank you.
Buying movie tickets,
Economics.
going to restaurants.
The big question mark is the GVA going to do exactly the same thing?
Cash.